But what about traditional markets? We talked a little bit about iBit, and I think with the idea that traditional markets coming in, whether it's option markets on all the exchanges that people use for option markets, whether it's more futures products, more swaps products, right? The derivatives market's very, very, very big, right? There's a lot of pieces of that we haven't discussed yet. I'd love to get this panel's perspective on how the advent of both more products and more liquidity on traditional venues for equitized, let's just say equitized digital asset markets like iBit, for example, Bitcoin, is going to help.
When you think about it, why should an equity index futures contract last 4 months? It's clunky. Why not just change P&L every day and have the index futures contract go on forever? So that's one innovation that I think a lot of the kinks have been ironed out of in crypto that a lot of exchanges might want to adopt for financial futures products. To the question of equitizing, I have to go back to index products because the regulatory path of waiving in tokens one by one, which is how the SEC is approaching things here and how the SFC is approaching things in Hong Kong, is frustratingly slow and inagile, and I think there's a broad recognition of that. Index products which immediately grant investors diversification benefit, and also if one token goes bad in an index, it gets replaced, right? You don't lose everything and nobody has egg on their face too badly. So index products are broad market products that are both expressed in, let's say, ETF wrappers, but also in derivatives markets, are probably the ultimate tool to help the 5%ers, but also protect retail investors, and also allow the holdings of these long-term, crypto holdings to sort of refresh themselves into the latest winners. So we're hoping that there is a regulatory path to having methodology-driven index products be sort of a core crypto holding, perhaps outside of Bitcoin.